What's up, everybody? Steve here. Thank you so much for being here with me today. I got a really good article from Motley Fool. I'll be sure to link it down for you guys below, but it goes on to say 3 charts that show why the housing market may be starting to cool down. Now, the first chart that they go over is existing home sales are down. So these are existing homes on the market, nothing to do with new construction. And it shows we got 3, 6, 7 consecutive months. Now, it goes on to say, according to National Association of Realtors, in February 2022, there were 7.2% fewer existing home sales in February than there were in January of 2022. This marks the 7th straight decline in existing home sales year over year. I got a little note here. Now, a lot of people are going to say lack of inventory is contributing to this. I'm going to agree with you as well, but there's other things like the high price of homes, high mortgage rates, inflation, high gas prices. So there's a lot of accommodating factors, but I do agree our inventory is still historically low, and I think all that is going to change over time. The slight drop in sold homes helped boost the inventory of existing homes to 1.9 months of supply, although that's still well below the target range of 5 to 6 months of inventory. So this confirms right here that in a healthy real estate market, a healthy real estate climate, in fact, 5 to 6 months of inventory is healthy. And it's been like this for the last couple of years with just low months supply of inventory. And all that's doing is telling me that this is an unhealthy real estate market, unlike a lot of people that are saying, you know, the housing market is so hot and this and that. It's you know, almost kind of misinformation in my opinion, because it's you know, yes, sales are up and there's a frenzy and there's a lot of motion going into the market right now because people are trying to find homes and take advantage of low rates, but it's an unhealthy market no matter how many ways you twist it. New residential sales are down, okay? So this is something that, yes, we're going to talk about because of, people are going to say because of supply chain issues, people are not able to get, you know, trusses or certain things to complete homes. And I agree, there's no doubt about it. I have friends who are builders and general contractors, and they are having a tough time getting material to finish these homes. That will level out. I think the supply chain issues will change and things will get caught up, especially when you have people backing out of new construction home sales, which I did another video on that as well, because you had a lot of people that were basically locking in interest rates at, or they thought they were locking in interest rates at 3% or low 3s or maybe even 2s. And then their housing project just kept getting extended for CO, certificate of occupancy. And now they're at a point where it's maybe 2 months from CO, and they have to go ahead and lock their interest rate. And now they're locking an interest rate of 4.8% instead of 3%. And now they're thinking, hell, I can't even afford this property anymore. So I think people are going to step back and they're going to start canceling more and more buyer contracts. I did another video. Check that out when you guys have time as well. New home builders have tried furiously bridge the gap between demand and supply, ramping up development starts and completions since 2020. But February could be the first sign that supply may be exceeding demand. And I said in that video too that I think that we're going to see some small home builders. If you are a small home builder, be aware. Be sure you don't have a whole lot of your money into buying materials for properties that you guys are building for people. And be careful if you're building on spec. Spec is basically building a house when you don't have a buyer lined up. I think we will see some small home builders get stuck and go out of business because of that. According to the U.S. Census Bureau, Department of Housing and Urban Development, HUD, new home sales were down 2% in February 2022, and January 2022 levels were down 6.2% from February 2021. There is an estimated 6.3 month supply of new homes, putting it in a balanced supply market. That's very interesting. And I'm curious if that is homes that are completed, or these are homes that are maybe nearing completion, or maybe they've already had their starts. I don't really know what information they're utilizing for that 6.3 month supply. But that is interesting to say the least. It probably is from basically when they start construction on, because I know that based on that video I did, there was a lot of homes that were being built on speculation as well. And even our local home builders, the bigger ones, Pulte and Lennar, they're building homes when they know they're going to CO, 2-3 months out. So they know exactly, locking people into a purchase price, their rates and everything else. And then they're causing basically a bidding war. So they're putting it out on MLS and allowing people to bid on these properties. So it's going to be interesting to see if we see even a larger supply. Despite the national shortage, it seems people are buying fewer new homes. This could be because affordability is becoming a growing concern as home prices continue to rise. And now interest rates are climbing too. If this downward demand trends of new home sales continues, it could push inventory into oversupply. We just talked about that. And now interest rates are rising. Now, I got a little side note here. This is what got us into the mess to begin with. Access to cheap money. I mean, it did. Putting, the Fed rate at 0 or even below 0, and then mortgage interest rates at 2 point something percent is just insane. And that's ultimately what created this frenzy of people buying. And that's an unhealthy thing to do. And obviously we can see the chart of rising interest rates. And as of today, I believe rates were hovering around 4.8% again. The Federal Reserve issued its first increase in the federal funds rate in over 4 years. This move, while small, is the first of many as the Fed moves from 0% to 1.9% by the end of the year. What a lot of people don't understand is that is a reflection of cheap money, still cheap, but if you have anything that's adjustable like credit card debt, that debt is going to increase because of these rates. So if you guys are in debt, I highly recommend you do everything to get out of personal debt like credit card debt. While the federal funds rate doesn't set mortgage rates, it does impact the cost of capital and the complicated movements of financial markets, meaning lenders like banks and other non-mortgage lenders are likely to increase mortgage rates, pushing some of that higher cost burden onto consumers. Interest rates are now trending upwards, sitting at 4.67% today. And I think this article is from a few days ago. For a 30-year mortgage, a 1% increase from just a month ago. With the coming rate hikes by the Fed, it's very likely mortgage rates will continue to climb, making homes even less affordable. Coupled with inflation, rising food costs, soaring gas prices, increased property taxes, and property insurance, plus sky-high real estate prices, more Americans are being squeezed out of the market because of affordability. This will ultimately lead to a decline in demand and likely a slowing of home price growth as demand more closely matches supply. And I don't care what you say, even if you're middle class, upper middle class, or whatever the case is, everybody is getting squeezed. I mean, we're feeling it every time we step foot in our cars. I mean, our trucks, I have a pickup truck and a Tahoe, and they guzzle gas, and it's insane. So, just on that small example, the amount of money that we're spending on all these other ancillary items that we need, food, shelter, gasoline, energy, everything, when that increases, we're not taking that money. Even us as a family, we are going out a lot less. We're going to the big box stores like Costco, and we're buying in bulk and filling our freezer here. And ultimately, you guys should buy a stand-up freezer and do the same. It'll save you a ton of money and just buy in bulk. But we're going out less often. So it's a trickle-down effect. So when we're going out less often, we're not going to restaurants. So the owner of the restaurant's suffering. Now, it's not just the owner of the restaurant. It's also the server. The server is not making as much money because we're not going out. We're not tipping that server, right? And then it's the food supplier. If they're not getting as big of an order in these stores, then they're not going to buy as much food for the restaurants. And then that server that we would give a $25 tip to, they're not taking that $25 and they're not going out and they're not going and spending money at bars or restaurants or, you know, other things that they need. So it is a trickle down effect, and I don't even think we're starting to feel it yet, but it's a matter of time. Speaking of time, I greatly appreciate you spending your time with me today because, you know, time is very valuable. It's very important. It's very important to me. It's why I created this channel as well, because I want you to have more time on your hands, which is why I talk about financial freedom and creating more time instead of trading time for money. So I got some other good videos on this channel, so if you would consider subscribing and watching some of these other videos, I'm hopeful that they'll help you guys out, especially in the times that we're going into. I appreciate everybody on this channel right now. Thanks for watching.